Grand Real Estate Investment Trust, or GREIT for short. Great ideas, grand rewards. Our vision is to meet the unequivocal short-term needs and long-term goals of our associates, and yet achieving business excellence and prominence to improve and contribute to the welfare of our community, country, and the world. Our mission is to promote a common interest that provides personal growth and financial independence, community self-enriching, and socio-economic well-being. The objective. The purpose of this presentation is to assemble a syndication, to be composed of at least 100 investors to comply with the U.S. government's mandate of meeting the 100-person test, to operate as a real estate investment trust, or REIT. Obtainable goals: to acquire, sell, manage, and operate income-producing real estate properties such as apartments, shopping centers, offices, hotels, and warehouses, held for the long term, and be able to finance or make loans to real estate owners and operators in the near future. Sustainability: a sustainable growth that maintains a target capital structure without issuing new equity, maintain the target dividend payment ratio, and increase sales as rapidly as market conditions allow. Business model: by acquiring and or building properties with high capitalization rates and streamlining the operation. On average, GREIT can yield 10.87%, a process done repeatedly that leads to mastery. This section is a comparative analysis between the REIT and corporation's operating cash flow available after dividends. Assuming an operating capital of $101 million or 10,100,000 shares at $10 each, revenues being the same. All things equal, corporation's expenses are higher than the REIT because of the capital tax. Conclusively, REIT's income before taxes are 5.32% higher. Adding 38% income tax plus surtax on corporations, the cash available for distribution on the REIT is 57% higher than that of the corporation. To calculate the REIT's yield, the dividend of $10,980,000 is divided by the operating capital of $101 million. That gives you 10.87%, compared to the corporation's yield at 0.23%. Cost-effective: the stock certificate each costs $20 times 100,000 shareowners, will amount to $2 million. By printing our own certificate, it will not cost more than 13 cents each, one of the ways we streamline cost. This is the electronic prototype and template of the stock certificate. Your commitment: your pledge of a minimum $100,000 as a prospective and motivated investor to be included as one of the required 100 persons. These pledges will be collected as soon as a viable project and quorum has been reached. An important disclaimer: this presentation was explicitly meant for you and is not for you to share with others, unless you are seeking their advice or opinions. It is not our intention to solicit from people we don't know or have not met. We are not accountable or responsible if this video presentation gets into the hands of people it was not intended for. This is the end of our private presentation.